All right. Well, good. I'm gonna say good morning. I'm in my Tuesday morning meeting mode. It's Wednesday afternoon, and we're officially past the halfway mark of the week. And thank you all for joining us for our little fireside chat. Don, myself, Chris, just obviously we'll be here to walk you through just a little bit updates, current events, a little hodgepodge, but kind of an open forum. So if there's any questions that you have, absolutely, please just unmute yourself and chat away, or if you want to drop something in the chat box, please feel free. So we did touch on, again, a little bit about interest rates, current events, some new program that I mentioned in the Tuesday meeting, and a few other things to roll out there. And Chris and Don, obviously, just jump in anytime. And if one of you keep an eye on the chat for me too, if you don't mind. So, okay, going to start where we usually start, is just to kind of give an update. We might go a little deeper as opposed to just giving a ballpark of where rates are. Chat a little bit more about why they're at, where they're possibly headed. So what I have here is this is the past 1 year, the 30-year fixed rate for the past 12 months. Load that up for us a little bit. Okay, so 30-year fixed, nice little drop here. The Federal Reserve Board meeting was just a few weeks ago, and leading into that, fully expected to kind of be camping out in the 7.5, and heck, maybe even get towards the upper sevens. The Federal Reserve Board meeting itself there was no change to the interest rate, which was pretty much expected to happen, or nothing was supposed to expected to happen, I guess is a better way of putting it. Afterwards, press conference, nothing really, unexpected. But the Friday after, we got job numbers, and for the first time in a while, job numbers came back worse than expected. Now, job numbers being bad is not necessarily good for the economy, but that is good for interest rates. Since then, there's been a little bit more sprinkling of what the market rates might say could be some good news. And then today we had some inflation numbers come out, and they weren't, hugely great, but they were slightly better than expected from most fronts. So all of these little things have pushed rates back down to right where they're set right now. And hanging right around 7%. Now, it's important to realize that 6.99, some cases we might be a little lower than that. Other cases might be a little bit higher. Depends on the loan program, depends on qualifications, and about, a half a dozen other variables or more. But just to give you a little feel of what's going on. So just to take a look back, back here when that short little stint when rates were over 8%, and believe it or not, this site was actually showing this site, by the way, is in CrossCountry Mortgages, is kind of an impartial third party, and they do surveys to lenders throughout the nation. So sticking with simple blue line here, rates taking over 8% back in October. Now, this drop here is when the market sort of speculators and, prognosticators and everyone kind of say, okay, inflation's finally peaked. Inflation's finally coming down. We're seeing kind of the winds finally at our backs. And at this point, figure Halloween of last year, they started forecasting, okay, what are we going to see in 2024? We're going to see the Fed drop interest rates. Inflation is doing what it's supposed to. Everything is worked. I can't believe this is going to work out the way it has. We're going to see the Fed drop interest rates 5, 6, maybe even 8 times in 2024. So all on that optimism, you saw rates drop from over 8 to under 7 in about 45 days time. That is a huge, huge drop. 1.5% drop in about 45 days. I don't want to say it's unheard of, but it doesn't. There's very small bits historically when we see that happen. And then what happened shortly after is a little bit of reality set in, especially, as we're in January going, wait a second, there was no bump, no drop to the interest rate by the Fed. March comes around, no drop to the interest rate to the Fed. April, here we are, May, no drop to the interest rate. So when they were forecasting minimum 3 and anywhere from 5 to 8 drops by the Fed, we're still at 0. And right now, the expectation is maybe it drops before the end of the year, no more than twice, maybe once. And heck, there's even there's 2 of the Federal Reserve Board governors who are saying we still may have to raise interest rates. So obviously the Fed doesn't necessarily control mortgage rates, but they certainly have heavy influence on everything being borrowed, and therefore the economy. So that's just kind of a quick rundown of where we're at as far as where we're headed from here. I'd say, being around 7% right now is somewhat of an unexpected gift. If I'm talking to a buyer, I'm probably still leaning in the we could still see some improvement. It's not going to go to 5% or likely anywhere near 6% anytime soon. Higher for longer is the bumper sticker that Don has on his pickup truck. So that's going to stay for a little bit as far as being in this range, but I'd say we're feeling pretty good about where they're at. Don and Chris, anything you guys want to add on that?
Yeah, I mean, the inflation report, if you look at the actual chart, it didn't come in really all that much lower at all. But if you consider that it came in a little bit lower in what's expected to be a higher buying season going into the spring, there should be more, purchase activity, whether that's in real estate or people traveling or what have you. So to get an inflation number that seems to be improving certainly adds some optimism to the market. I mean, we saw a big drop in June of last year before kind of ticking our way back up on the inflation side, I should say. Hopefully, it's not the same case this summer, but yeah, I mean, I can see the optimism in the market for sure.
Yeah. And the coffee, stupid headline,
Yeah.
and a little anecdotal, but I can't help it. Coffee was taken out of inflation calculations for the first time in 30 years or something. Chris has a full-on economics degree, so he can nerd out on these things. But coffee, 3/4 of the population drink it. Prices going up. You think that impacts the economy? I would say, yeah, it probably does. But they pulled it out, and coincidentally, we got slightly better. Now, don't quote me. I'm not saying inflation went down because they took coffee out, but I just thought that was an interesting headline to see.
Yeah, I don't know how much coffee makes up in the basket of goods that they look at, but my joke was, it's not discretionary anymore. Everyone has to have their coffee. So, it's like gas and your mortgage payment. Like everybody's got one, it is what it
Well,
is.
you can answer that question by driving by a Starbucks or a Dunkin' Donuts and just look at the lines.
Yeah.
Yeah.
Well, hey,
And
I
we're
got
not
both of
paying
the.
cash either.
I got the Nespresso and the Keurig out front, the little cross-country lobby here, and yeah, everyone's burning through those pretty good. So, and feel free, don't forget, for those of you who aren't in the the Pepper Pike office much, got a nice little lounge for you guys. You want to hang out, get some snacks, have some coffee. I won't bug you, and whatever's CNBC or whatever's on the TV in there. We got the sports going pretty consistently when that's being played. So anyway, I always start with that. While we're here, just to remind you, our webpage. Feel free, if there's great information on here. I have some people who say, hey, what, I'm putting a newsletter together. Can you write something up for me? 3 of us are happy to do that. Some people just go right to the blog within the resource center and just pull up information articles and either quote that or copy and paste it. Hey, go for it. Feel free to link our information in there, but just want to give you a heads up on that. So, all right. If and again, to the audience here, feel free to chime in. Let us know if we need to expand on something, or if you're bored and want us to move on. Just feel free to politely or impolitely say so. So this one, Tuesday, we rolled. I mentioned at the for the office Tuesday realtor meeting. If you happen to be on there, the CCM line of duty death benefit. So this is a new program. I should say a new program. You guys may have a better word for it, but it's a enhancement. It's just something we offer to any police officer, fireman, paramedic, first responders, in short, a line of duty death benefit. So if a fireman applies for a mortgage, whether they're putting 3% down or 20% down, we're going to tack on this benefit. Should they fall in line of duty, we will cover their mortgage. CrossCountry Mortgage will pay off their mortgage up to $525,000. If there's two firemen and a police officer buying a house together, great. They each are going to be under the same benefit. There's a few exceptions, like for certain jumbo loan programs, for some few first-time homebuyer grant programs. It's not eligible because we're not allowed to tack it onto that particular one, but it's a fantastic program. So as you may have heard, Ron Lenhart, as I mentioned before, but Ron Lenhart has a soft spot in his heart for military and first responders, and but a good chunk of the events that we put on directly are related to these lines of work. So this population, these customers. So it's a great opportunity. There's nothing you need to know or do about it. The buyer doesn't have to sign up for something. They have paid no higher fees, no higher interest rate. This is just an add-on to first responder working with us. But DJ, anything you want to add on that?
No, but like you said, Sean, Lou, what happened this past week on the east side, just having us available to anybody in the line of duty, I think from CrossCountry Mortgage is just a huge, huge benefit. And we hope we never have to use it.
That's for sure. Yeah. So if I don't know necessarily that this is, it's kind of an awkward one to market, but it's kind of, it shows certainly CrossCountry is kind of what their, beliefs are and big picture, more side of things. So just know that that's there. You may see this documented. We'll probably put this in the Facebook post just to have that out there as well. So those are some of the few things I wanted to touch on here. Any questions? I was going to keep on going here unless somebody had anything specific that they wanted to touch on. Okay. So I'm going to recap a few of our first-time homebuyer programs. Let me get this one going here. And this one. Actually, before doing that, our 15% no PMI, this has been a home run. Literally, the last conversation I had before jumping on this Zoom was a first-time homebuyer. He's moving from Columbus to here. Actually, he's already living here, temporary housing, looks to be buying a house as quick as possible. And he hasn't sold his house, so he's not going to sell his house. Actually, restate that. So he's going to keep both homes. He was planning on putting 20% down. He's got great credit, and I just happened to say, hey, yeah, 20% down is great. You get to avoid PMI. If you're tight on funds, or frankly just don't want to come up with 20% down, we could still do 15% no PMI. He's like, great, sign me up. So his motivation was not paying PMI. He doesn't know what kind of house he's buying, if it's going to be a fixer-upper or what, but he doesn't want to spend any more money than he has to, and he just wants to, stay out of PMI. So he's hooked on this one. So a great program. It's the same interest rate. So if we're quoting a 7% interest rate with 20% down, it's a 7% interest rate with 15% down. For somebody with marginal credit, this option might not be available, but it is a, it's a no-brainer for somebody. Where this also comes in is, we'll just take some soft scenario here. Let's say someone's buying a house for $200,000 and they're putting 20% down, so they have a $160,000 mortgage. We go, maybe the house is only listed at 190, maybe it only appraises at 190. Everyone kind of thinks, oh, geez, now the house only appraised for 190. This is going to only mess up the loan. Nope. Their loan to value just dropped from 80%, or I should say jumped from 80% to whatever the math is, 84%. Guess what I have to tell the buyer? Yep, the house appraised a little bit short. You're getting the same loan, the same interest rate, still no PMI, nothing's changed. Oh, okay, cool. Here's a copy of your appraisal. So that's also, and frankly, even if we didn't have the 15% down PMI, there's other ways to kind of lessen the hit or the blow or the impact that there may or may not be financially. But just 15% down, just a no-brainer for a lot. Chris or Don, anything you want to add on that?
No, I think the biggest benefit, it really comes into play if you do have that short appraisal. If somebody has appraisal gap coverage, they may not have to worry about covering it due to just dropping the LTV.
Cool. All right. Let me jump over here. As far as down payment assistance, getting back over there. So we've got a few different versions, and some of these, this first one is income based. So this one, if you have a first-time home buyer conventional and their income is under $75,000 a year, we're going to give them a 2% credit up to $4,000. We could be strategic about this too. The first time I used this loan, I had a couple, they made about $120,000 between the two of them. They did not qualify for this particular program at first glance. But as we dug a little deeper, we took the wife's income. She was still in the loan, but we took her income off the application, which is perfectly acceptable to do for this program. His income, the husband's income, was $72,000. We gave them $4,000 by doing nothing more than just taking her income off of the application. So we really, if there's a way to get buyer free money, we will bend over backwards, jump through hoops, think outside the box. Now, in some cases, we might have to take the person off because of debt ratios and things like that. But all in all, it's a great option. Now, there's a lower threshold where if the income is a little bit lower, we might be able to provide a grant of $5,250. So lower income steps up the grant a little bit. So this one is, it's specific to CrossCountry Mortgage. This is a CrossCountry Mortgage grant. We partner with Fannie Mae and Freddie Mac for that one. The other one you've probably heard us talk about, this kind of rolled out, I think it was last November. This one is a great program because this one is very, very unique. It's a $6,500 grant. There is no income limit. So that couple who I said was making $125,000, they would have qualified for this one as well. But it's based on where you currently live. So I'll give you a quick example. I was working, well, I'll give you a few examples. Have someone, I can't remember, I think she lives in, I don't remember exactly. I believe it's in South Euclid, and she's buying a house in Twinsburg. Or no, let me flip it around. I'll give you a different scenario. Different woman. She lives in South Euclid. She's buying in Bedford, buying a house for about $105,000. She qualifies for a 3% down payment. We're giving her $6,500. So we are giving her enough money to cover her entire down payment, most of her closing costs, and she was able to get a 3% credit from the seller. She's paying an appraisal fee, which we're going to refund back to her at closing. She is bringing in right now, expected to be about $700 at closing, and she's getting the house. Oh, and by the way, we're also buying a home warranty for her. So she's getting about $7,500 in value, $6,500 in cash at closing, and she's buying this house and getting into it with less than $1,000 out of pocket. So that's one scenario. I have another couple. They live in an apartment right now, and they closed already. To reword that, they live in a condo in Van Aken. They are first-time home buyers. Their income is about $200,000 a year. They bought a house for a little over $400,000, and they're putting 20% down. They don't need the $6,500, but guess what? They're getting it. They're also getting a discounted interest rate through this program. But what they decided to do with that $6,500, they said, "Hey, we're getting the $6,500. Do you want to, add that to your down payment? Do you just want to, reduce your down payment and keep the difference in your pocket? Do you want to use it to buy down points?" They bought down points, and they ended up with an interest rate of around 6.2%. So, somewhat outside the box thinking. We're giving them $6,500. They're just using that money to buy points and lower their interest rate considerably. So don't have to be a first-time home buyer. They don't have to live in the house for 7 years. Like there's OFA program has a grant, but there's some drawbacks if you move out of the house or refinance. No strings attached on this one. If they move a year from now, it's not like they have to pay it back. It's an awesome program. This and the last one with the $4,000, these are strictly conventional Fannie Mae, Freddie Mac options. This one specifically Fannie Mae. They do have to take a home buyer's course, but it takes about an hour and a half. It's online, it's free. And almost every buyer I talk to would say, "How was it?" Almost reluctantly, they're saying it wasn't bad, and I did learn a thing or two. So for what that's worth. Chris or DJ, anything you guys want to comment on this or the experience you have with
Free
it?
money.
Free money.
Free money.
Free money.
What I've been telling all the agents I work with is if you look at the numbers in 2023, half of buyers were first-time home buyers, which is crazy. I mean, it makes sense because a lot of move-out buyers are kind of locked into a lower interest rate. Maybe they're a little more timid. Maybe they're going to hold off. Programs like this where you can get free money and half the people out there in the market right now are going to be able to take advantage of it. Seems like a no-brainer to me.
You're right. And first-time home buyers, I always clicked well with first-time home buyers. I back in the old days, especially probably because I didn't know anybody else out there and was too afraid to talk to anybody.
Back in the old days.
Back in the old days, yes. Yeah, kind of just I think it was at the mastermind or something a month ago. We were talking about or affordability is tough. It's depending on the perspective of the consumer. One may be tougher than the other, but there are more tools for first-time home buyers. They've made it easier if your credit isn't perfect. They've softened up on how it hits the interest rates. If you're under several different income limits, you're either going to get a discounted interest rate, discounted PMI, or this money. And this one, like I said, there's not even income limit. So there are plenty of tools and ways where you can get assistance. And of course, they're still flexible. You can still get money as a gift from a relative and all other sorts of options there as well. In addition to this, sometimes there's some community programs, like City of Euclid has their own grant process. Cuyahoga County had theirs, but I think they're out of funds and haven't replenished it yet. So sometimes there's different community programs that pop up as well. It's not always easy to combine, one grant and another grant, but we'll look at everything and make every effort to do so. But this one program, unfortunately, we can't just say, hey, here's the map of what areas qualify. But there's a big there's not, for whatever reason, a lot of it's more on the east side. A lot of the Heights area, Cleveland Heights, University Heights, Bedford, Warrensville, Euclid, part of Cleveland. I had the customer downtown who was I have someone on, I can't remember if it was Bellevue or Green, but they lived on the wrong side of it, and the program didn't qualify. So we will try and find any way to make it work for somebody to hopefully be eligible for these programs. But yeah, this couple in Van Aken, he joked, he's like, hey, do you care if I print off your flyers and slide one of these under every door? Because everybody at that Van Aken address is qualified for a $6,500 grant. I don't think he did it, but I said, heck yeah, feel free, because it's a nice deal. So any comments or questions on that? No? Okay. Give me a second here. What I was going to touch on, and this may get a little wordy, and I don't know if it's not quite as exciting, but I was going to touch on the recasting process or appraisal gaps. Does anybody want to talk about either of those?
I would. Both of them are good topics, Sean.
Okay. All right. Well, I guess we'll start with a recast. So let's walk through a scenario here. Let's say this is just kind of use some rough numbers here, but someone's getting into the market and quickly finds out that putting in an offer contingent on the sale of a current home is going to, I would say, complicate things, but it's probably going to make it very likely the seller's not going to consider their offer. So let's say I'm buying a house. I wasn't necessarily in the market for a home, but here I am. My house is not on the market. The only way to move forward on my next purchase is to just buy it without selling my home. So what a lot of people are doing are thinking, geez, how am I going to come up with 20%? Should I look at a bridge loan? And we could do a talk on that. Should I get a gift from a relative? Should I pull money out of 401k? All of those are perfectly fine options, but with a recast, there's often an easier route. So how this works is, let's say I was going to buy a house for $200,000. In a perfect world, my house would be sold and I'd have 50% down. I'd have $100,000 from my sale. But my house hasn't sold. I don't have $100,000 sitting in my checking account. Well, how am I going to get this done? So one way to do this is, on this house, let me buy this house for $200,000. Let me just put 5% down. Let me scrounge up $10,000, or get a gift, or both from a 401k, whatever. Just put that minimum down. So I have a $200 sale price. I'm putting $10,000 down. I have a $190,000 balance. I close on that, assuming I qualify, I close on that new home. I have that new payment with PMI and everything else. Now I've got two houses. I move into the new one. I finally get the house that I just moved out of. I'm ready to list. It's on the market. I list it with, Carolyn. Am I pronouncing that right? All right. Carolyn just listed my house. She puts it in the MLS on Friday. By Sunday, I have 50 offers coming in. I decide, and then Monday I'm under contract. We close 3 weeks later, and now I've got $100,000 coming my way from the sale of the house. So what do? I take $10,000 of that, just put it back into my 401k or wherever I pulled it. I take the $90,000. I don't just write a check yet. I call customer service, or call Sean, because he'll remind me how, well, I guess it's my deal. I'll call Don and say, hey, Don, how does a recast work again? So what Don will tell me is, call customer service and say you want to recast the loan. So I tell them, I'm going to send in $90,000. My balance is going to drop to 100, and I want to recast, not refinance, recast. They're going to take that money, they're going to apply it, and they're going to re-amortize the loan for the remaining 29 and a half years. My PMI is going to go away, my balance is going to go down, and my payment's going to be based off of that $100,000 balance on that loan. It's a recast. It's not a new loan. It's not a new appraisal. It's not even a credit report. It costs a whopping $300, or no, I take that back. It's $250. You can't do it right away. I mean, you're supposed to wait 6 months. We have done it much faster than that with CrossCountry. And we want to mark the file that it's going to be recasted just so we can kind of hopefully keep the servicing with CrossCountry Mortgage. But it is a very, very powerful tool. Just about every Fannie Mae, Freddie Mac, lender has this as an option. Now, some of them, there was one lender who was charging $900 to do a recast. I mean, that's a lot of money, but really don't have a choice. Based once the mortgage is there, you don't have many other options. But just so you know, our fee is $250. And you don't have to be an expert at this necessarily. Just know that it's a great way for a buyer. When a buyer says, well, I'd love to buy a house, but I don't have any money because I don't want to sell my house first. A recast is a great way to say, hey, just come up with a minimum and we'll redo it later. Any questions on that? No, Chris or DJ, anything to that?
No, I mean, that's straightforward how you did it. It's just a great way to get into a house without having yours sold, and knowing full well you can take that money, apply it to the principal, and rewrite the note.
Yeah, and the parts, where there might be some ejections is, of course, the buyer does have to qualify with both of those, but they have to be comfortable with owning 2 homes and having 2 mortgages. Big reminder, you always skip a month before that first payment. So if someone's closing on a house June 15th, their first mortgage payment isn't until August. If Carolyn is half the listing agent I think she is, she's going to sell that thing in a couple of days, and you'll never have to have 2 payments. So, yeah. Sorry, Carolyn, you're the top of the list here, and you're the only one with your face showing at the moment, so you're getting picked on. Sorry about that. Anyway, that's a great, again, don't feel like you have to be the expert to explain this. Just know it's another tool. And frankly, it's a great counter to, oh, well, I can't buy 2 homes at once. I don't want to do a bridge loan. No, you don't have to. So there's that. Another one on strengthening offers, appraisal gap. So Don and Chris, please jump in here because I'd love to get your 2 cents on kind of the best way to wording on this. But let's go back to that scenario I kind of mentioned in the middle, or the beginning, whenever that was. So let's say I'm in the market for a home, and I'm looking at a house that's listed at we'll just say, keep it easy here, $180,000. But the market is crazy. I'm going to have to overbid, and let's say I'm going to bid $200,000 to get that home. The seller may say, okay, well, your whole offer is contingent on financing. You're putting 5% down or whatever percent down. If that appraisal comes in short, I don't want you to come back and say, oh, can't get the loan. I'm going to go walk away, or ask you, Mr. or Mrs. Seller, to lower the price. So the realtor often chimes in and saying, hey, this house is only listed at 180. You're paying 200. It's not really safe to assume this house is going to appraise at 200. To give the seller a little bit of confidence, or a little bit of insurance, maybe might be the better word. Let's do an appraisal gap. That could be for $5,000, $10,000, $20,000, $50,000, whatever. So it's kind of a variable that you, the buying agent, and the buyer kind of determine. But for me, if I'm buying that house, I might say, okay, well, I'm okay overpaying, but I only want to do an appraisal gap of $10,000, which means, the way I translate that is, okay, I'm buying it for 200. If the house appraises for 190 or more, I'm still buying it. Everything stays the same. If it comes in at 180, okay, well, now there's a I automatically covered $10,000. Doesn't automatically assume the seller's going to cover the other 10, but it kind of still leaves it open for negotiation. But what that appraisal gap does, in my mind, is it sort of pre-authorizes or pre-negotiates what's going to happen if that appraisal comes in X amount of dollars short. Now, for me, the buyer, in that example, if I'm buying the house for 200 and only appraises for 190, and I was only putting 5% down, I can't get a 190 loan on a house that's only worth 190. So in that example, I'd have to come up with probably $8,000 down, or excuse me, $9,000 extra down. So I'm kind of pre-agreeing to come up with $19,000 in that example. So a buyer has to be familiar, has to understand that, and you as the appraiser, or excuse me, I'm sorry, the realtor has to have a pretty good feel on that to explain it. But do lean on Chris, myself, Don, or whoever your loan officer is, because when that appraisal comes in low, the lender is who's going to have to really explain and make sure the buyer knows what they're getting into, what they're signing up for. So absolutely would strongly encourage, even if it's a conference call between the buyer agent, the buyer, and your loan officer, just to make sure that the buyer knows what they're agreeing to. And if an appraisal comes in short, whether it's a little short or a lot short, what the ramifications are of that. Chris, anything I missed there?
I don't think so.
No.
Yeah.
And the wording, because there's not, seller to credit X amount towards buyer's closing cost prepaid points, that's somewhat universal. But like how to write an appraisal gap, I don't necessarily think, I don't think I've seen it like pre-written in any of the local contracts. So usually it's on a separate addendum, and do share that with the lender too. But the wording usually is buyer to assume appraisal shortage of up to $10,000, or appraisal gap, I think, is a buyer offering appraisal gap of up to $15,000. I have a contract that came in today with full waiving appraisal contingency. So still, that more or less implies no matter what the house appraised for, the buyer is going to get it done. Obviously it'd have to be pretty far, but that can dramatically change what a lender's able to offer a buyer. So hopefully that particular scenario is known ahead of time of what the worst case scenario is, but nonetheless. So yeah, that's, if you have questions on it, absolutely encourage you to reach out to us. If the buyer's working with another lender, always feel free still to reach out to us, but oftentimes we're going to say, hey, you're gonna have to talk to that loan officer to see if there's anything specific they request, but we'll give you what we want to see, which between Don, Chris, myself, we, believe it or not, have over 50 years of experience in this, and appraisal gaps really weren't really a thing until 3 or 4 years ago. Recasting has been around forever, but you never heard anybody talk about it too much until the market kind of dictates it as being an option. So so there's that. But any thoughts or questions on that? No. Chat box is clear. Okay. Oh, you know what? While I'm thinking of it here, if anybody wants, I'm gonna put that. I'll drop a few flyers. I'll put the line of duty in there, and always feel free. You could email either of us as well. I'll put that $6,500 community promise in there. And yeah, feel free. I know I've talked to some agents, especially those in bold. They're doing a lot of door knocking. Hey, I got a listing, swing on by. Feel free to take the $6,500 if you kind of are trying to kind of farm a certain area. Feel free to give Chris, myself, or Don a call. We'll let you know if hopefully the area you're in, or the street or the block you're marketing is within one of these. And again, the $6,500, that's probably more for first-time home buyers. So for grants, years ago, the Keller Williams office used to be across the street from the Woodmere City Hall and Fire Department. I remember when we first came out with the Heroes program. I can't remember what agent it was. I'm surprised I can't. But she walked across the street with a handful of flyers on it, and to drum up some business. So yeah, I wouldn't fake any fire alarms just to hand out flyers, but certainly get creative and work the networks that you have for these areas. Let me jump over to the Heroes program real quick. That's another grant program through the state of Ohio. Let me just pop open this one. So if you've heard of OHFA, OHFA, that's the Ohio Housing Finance Agency. So this or the bond program, this has been around forever. So they've got a pretty nice interest rate here. So if you're a first-time home buyer going with an FHA or VA loan and you're not getting a grant, you can get a 6% interest rate, which is well below market. If you are getting a grant, the rate goes up a little bit, but here, let's take an example for a hero: police officer, teacher, paramedic, nurse. Forgetting a couple there, but police, teacher.
I'll pull it up. I'll pull it up and I'll read it off.
Okay. And so you can get both down payment assistance and a discounted interest rate. Now, few strings attached. There is income limits. There is a home buyer's course. You have to, you can't, for this particular version of the program, you have to be a first-time home buyer first-time home buyer. But the few drawbacks are the closing costs are a little bit higher. Not tons, depending on the sale price. It could be as little as $1,200. It could be as much as $2,200. But hey, you're getting $10,000 in a grant, paying a couple $1,000s extra in closing costs isn't bad. The one big drawback, and this is a big one, is with this grant. So on a $200,000 house, you're getting a $10,000 grant. What it actually is, it's a forgivable mortgage, forgivable loan. So on this, my example here, $10,000, every year, 1/7 of that loan is forgiven. So after 7 years, you sell the house, pay it off, whatever, you don't have to pay that second mortgage. That $10,000 is gone free and you never had to worry about it. But let's say you refinance or sell the house after year 2, you have to pay back whatever 5/7 of $10,000 is. So, most people, a lot of first-time home buyers using this program, they don't plan on moving in 7 years, so there's not high risk to it, but everyone sure is hopeful and optimistic that rates drop. So with this program at 7%, if rates were at 5% in 2 years, you're going to be a real tough position to say, okay, do I want to refinance for a lower interest rate? If I do, I got to pay back, whatever, $8,200 or whatever is left on that grant. So it does have a pretty heavy string attached, but it is a great option. It's oftentimes, down payment is the difference between somebody getting in a house or not. So for what that's worth. But anyway, that's the OFA program, the Heroes program. Just so you got that.
Professions that are included in the Heroes program. We have veterans, active duty military members, or members of reserve components, including surviving spouses, police officers, firefighters, volunteer firefighters, EMTs, and paramedics, physicians, nurse practitioners, nurses, including RN and LPN, and STNAs, and teachers, so anyone teaching pre-K through grade 12, school administrators, and counselors. So it's a broad brush, cover a lot of people.
I mean, and yeah, you're going into a lot of us have family members either in, well, certainly the military, police, teachers. Have them take a stack of flyers in, drop it in the principal's office, and you never know. It's a great angle to work. They have a version for repeat home buyers where the house has to be sold first. You don't get as much of a grant. The rate's a little bit higher, but that does exist. So you don't strictly have to be a first-time home buyer, but the best parts of the program are if you offer so, for what that's worth. Cool. So that's mostly what I had to chat about today. So when we first started these, I remember the first meeting was very awkward because it was like a fireside chat. Hey, I'll throw out some ideas. We'll get the conversation going. And then ended up mostly like today where I'm doing all the talking and begging everyone to chime in. So if anybody has anything else they want to add, I'd love to cover, whether it's current events, what we're seeing in the news on the Fed, coffee and inflation. I would let Chris pick up that one, but any of the other programs we have, but I'm open floor if anybody has anything else they want to chat about.
Hey, I would like to know a little bit more about your programs with VA loans.
Mm-hmm. So I'll give you kind of a broad, just generally VA and CrossCountry mortgage. I don't know where we finished in this last calendar year, but we're routinely one of the top 10 lenders in terms of units and volume for VA loans. So we do a lot of them. DJ, who's behind the black curtain there with his name on it, does a ton. He was really active in kind of the veteran community, so to speak, and such. So VA, just in short, and Chris, I don't know if you happen to have a VA flyer handy, but feel free to pull that up. Sorry. VA, 0 down, no PMI. right there makes it one of the most unique programs all by itself. When it comes to credit, very, very flexible when it comes to credit guidelines. So as I often say, if you've got a 640 score or better, you're pretty much a shoe in, not always, but almost always, for VA and FHA. And VA will go down to 580 and technically even lower if it's based on extenuating circumstances. So very flexible when it comes to credit. Now, when the score is under 640 or under 600, the rate does go up a little bit. But all in all, it's still a fantastic program. The closing costs are comparable. Usually, I would say about the same as any FHA conventional or less. That used to be a bit more of a gap, but most of the costs that you see on a traditional, you're going to see on VA. If it's a lower price home, the cost will certainly be a bit less. The big thing to be aware of, not afraid of, but be aware of, is whether it's conventional, FHA, VA, typically we're going to have to do an appraisal, and that VA appraiser is also considered like a VA inspector. I mean, that's not technically a second title that they carry, but how they're treated. So the appraiser is going to be a little bit more picky regarding the condition of the home. They're going to be looking at, are there handrails going to the second floor? Are there batteries in the smoke detectors? Which, by the way, if you have a listing, before you walk out the door, go test the smoke alarm buttons. It's for the price of a few bucks. You hate to have that cited and have to have the appraiser come back out to make sure that somebody plugged in or put batteries in the smoke alarm. So sidebar there. Chipped paint. I wouldn't be afraid of an old roof, but if it's leaking or it's missing shingles, that's probably going to be a red flag. So these are the things just to be aware of. Now, a lot of realtors just assume, oh, geez, a VA offer coming in, we're going to get a laundry list of repairs. Now, I always kind of tell people a home inspection is hours. A point of sale is probably 30 minutes. A VA inspection, less than that. So if you have a house that's point of sale compliant, it's almost always going to be VA compliant as well. Point of sale are pickier than VA. And most, if the house is in pretty good shape, habitable, occupied by a resident already, you're typically not going to have too many problems. I don't know what the statistics necessarily are recently, but going back, I kept a tally for a long time, and it was like 1 out of every 7 appraisals I did that were FHA or VA came back with a repair. And of those, usually they're ticky-tack stuff, GFCI outlets by the sink or bathroom or whatever, but that was usually it. So, and as far as other programs, like these programs, you can still get these grants, some of these grants, depending on which one we're talking about with these programs, OFA specifically. So even though you don't need a down payment, you can still get down payment assistance. Or even if you don't want the down payment assistance, you can come get a VA loan and get a 6% interest rate. Pay a little bit higher closing cost fee, but absolutely able to do. Is that what you're looking for?
Yes, I just wanted to know a little bit more about, since I've never done a VA loan before.
And don't be afraid. What I always tell people, hey, let's say you're heading out with a buyer and you just found out they're a veteran, call us on your way. We'll give you the few little bullet points you need to know. Or if you're listing a house and have that VA offer come in, give us a call. We'll give you kind of a quick rundown of what to know.
Perfect. Thank you.
Sean, quick question. Hi, it's Cindy Reynolds.
Hey, Cindy.
Hey, a couple of years ago, maybe about 2-3 years ago, I had a VA client. I want to know if it still holds true, but I had a VA client who was buying $1 million house. And I think at one point it was only up to 500, but it was approved for that $1 million house. Is that still the case?
Believe it or not, yes. So VA, there's a spreadsheet I could pull up. I won't do it because I'll look like an idiot and it will make no sense by the time I'm done. But yeah, I think the largest VA loan I did was probably around 2020, 2021. It was an $825,000 home. They bought it. They put earnest money down and didn't want it back. They said, no, we want to put something down. So that $5,000 is what it was. So, but you can go zero down. So what it is, and you can use your VA loan again and again and again. Where you start to lose some is obviously if you have a foreclosure. Believe it or not, you can get it partially reinstated. But if you own a house and are buying a house at the same time, you have a VA loan on the house you still own and are getting one, that's where you might be a little upside down and say, okay, well, you're going to have to put some amount down. So I can't tell you exactly where it tops out, but after a certain point, you have to start putting down some money. But yeah, it's well over 800,000. If you had $1 million one here, locally, that's certainly going to be, the higher ceiling too. So it's kind of shocking how high you can go with a VA loan, true zero down and no PMI. And the interest rates, when you get above a 766 loan amount, that becomes a jumbo loan. And the rates are typically higher in addition to, other limitations. VA doesn't, the rate may be slightly higher at that amount, but it's not significantly. And you're not jumping through, much more red tape than if it were an 80,000.
Thank you.
Yeah. And hey, yeah, if that's your market, VA loans, the $1 million price point, God bless you. We'd love to help your customers on those too.
Yeah.
And I know I mentioned this once or twice already, but VA loans, Dixie Tuzlin, who some of you on here know from years back, she was a productivity coach and a realtor. And I can't remember, I think her husband or boyfriend, somebody was a veteran. And anyway, they hung out at like the Eagles Club, and the VFW was kind of like their go-to place on Friday night hangout. Well, I did a handful of VA loans with her. She's not a veteran, but she hangs out with a bunch of veterans, and word spreads. And before long, she became like a VA specialist. So there's a couple of agents here in the office too, are veterans themselves. So they're in that community. They've had a VA loan themselves. Thanks, Cindy. You nailed it. Cindy chimed in and said, yes, it was indeed her boyfriend. I think it was John, if I'm not mistaken. So great. If you can get in any type of network or niche like that, as our fearless leader Mike Rapaski says, the riches are in the niches. And VA loans and Don's also licensed in the state of Nevada, where there's a heavy veteran community and does a lot of VA loans out there. So, great option and great resource.
But the reality is, Sean, you may have mentioned, I had to jump off the call real quick. We can do loans in any state.
Good point. And Puerto Rico.
And Puerto, yeah.
Well, I haven't done one there. One of these days, I will insist on an on-site closing too.
Just not right now. I have a friend that lives down there in Old San Juan. They've been
Really?
without power going on week 3.
Really?
And that happens down in Puerto Rico.
That's an adjustment. I was watching Puerto Rico HGTV the other day, and the one that said that they were saying this house has hot water. It was like, wait, the other one before us didn't. So apparently everything's a little bit different. But
Yeah.
Hey guys, it's Mike Mitchell. I got a question for you.
Go for it. Thanks, Mike.
Hey, I've got a first-time home buyer that works for PNC and got a pre-approval from them, and they offer, I believe, a 0.25% discount for employees. Is there anything we can offer him to make them look your way as a possible?
I've done 2 PNC branch managers loans before, so that helps.
Okay.
The reality is, when a bank is offering your employees something, 99.9% of times we can offer them something better, even against their employee discount.
Okay.
And it's just a simple phone call. Michael, let us talk to them. Let me find out what their income is, what their credit scores are, and see if they fit in one of our programs as well.
All right. Yeah, I gave him your name already, Don, and I think he's a little bit dead set on PNC just because he thinks he's going to get
That's
the
fine.
best. But I want
No cost, no obligation.
Yeah, I want to be able to call them and say, look, I think there's something they could probably do for you as well. So look into it.
Thanks, Mike.
Okay.
You know what? Sometimes it's a little disarming too. Soft pulls right now, and DJ Chris, feel free to chime in. But every customer I talk to first, we do soft pulls on the credit report.
Mm-hmm.
It is such a battle when I talk to somebody. Hey, here's the loan process. I give them like a 15-minute little consultation on, okay, you want to buy a home. This is the steps. Then we say, okay, well, the next step is getting a pre-qualification. And they just put the brakes on because they don't want that credit inquiry, because I could go on a whole tangent on why that's ridiculous, but we'll say, hey, we'll just do a soft pull. It won't be a hard hit. What's the harm? We see your credit scores. We can tell you all the numbers. In some cases, we can even issue a pre-approval letter on a soft pull. Now, there's some risk there, but nonetheless, that can help. And just sort of like, hey, I had a customer the other day. He was allergic to hard inquiries, right? The way he talked, he would never have one look at his credit report. So we do a soft pull, pull a soft pull. Guess what? He had an inquiry on there with KeyBank and Rocket. I said, you're worried about these hard inquiries. You just had 2 other banks pull in the last 2 days. Like, why do you want a third one? I was like,
Right.
well, you got a 45-day shopping window. That one doesn't even matter. But anyway, here's where we're at. We issued a pre-approval. But anyway, sometimes buyers drive us all nuts.
Right. Yeah. Okay. Great. Thank you.
Yeah. Cool. Any other questions?
So what programs do you guys have in place for a second-time home buyer?
Well, there's the
Sorry.
OFA program has a repeat option. There's another one that, based on where they live. So I have somebody who bought a condo, 200 and no, I take it is right around 300,000. And based on the zip code or the address, they're not a first-time home buyer. Their income, there was no income limit. We were able to lower their interest rate 0.25% just because of where the house was located. It was Bluestone across from Severance in Cleveland Heights. So, very, these are all over the place in weird pockets, rural areas, even where they pop up. Some of these programs, there are some income-based programs where if you're a repeat buyer, but you're making below a certain amount, sometimes there's a little discount on the interest rate. It's not always the interest rate too. Sometimes there's a discount on the PMI. I had a guy,
Sean, real quick, so we don't miss anything. It's so important that we get that information in the system, because it picks up their addresses and their income, and it'll tell us everything they're qualified for, so we don't miss it.
I had a guy did his loan. He bought a house here like 6 years ago. Then last year he decided he was moving to North Carolina. 4 months later, he decided he didn't like it and moved back here. So he got a discounted interest rate on that house on there because of his income limit. Then he sold it, bought a house up here. He got like 3 first-time homebuyer programs on 3 homes. Technically, he wasn't a first-time homebuyer, but got the equivalent of it. No grant or anything like that, but heavy discount on interest rate and PMI. So he ended up being one of my best customers because he can't seem to make a decision. So who knows? He may call me back in the next 60 days. I can't wait. And if you don't mind me mentioning, he's a voice actor too. So I love when he calls because he can do voices and it's always interesting. So he still owes me an outgoing voicemail on my side.
That's fun.
Anyway, talk about going off on a tangent. I apologize.
Thank you.
Anything else? All right. Well, thank you guys for joining us. So we do this once a month. We kind of dabble with doing an extra class in addition to this. The last few we've done were kind of like the attendance was so-so. So if anybody has on here like, hey, on the next Fireside, if you guys could talk about this, or if you guys we have a class on PMI, we've got a class on credit, we got a little bit of class on anything. If anybody, thinks that there's a demand for it, just feel free to speak up, throw something in the Facebook group, or of course, get with Carrie and the admin team. But yeah, if there's anything we can do for you, just know that we're available day and night. Nobody seems to be shopping for a house, 9 to 5, Monday through Friday. So when you're working, we're working. So just reach out if you need us.
Yes.
All right.
Thanks.
Thanks, everyone.
Bye.
Thank you. Bye.
Bye.